Kevin Ramsier, welcome to Acquiring Minds.
Thanks, Will.
Kevin, you're the managing partner of SIRE Capital Partners, an independent sponsor group that you founded. Mm-hmm. There is much to say about what you do today, some of which we covered in a separate interview for our sister podcast, the Minds Capital Podcast. Today, you and I are going to spend time on your origin story or your first big success, which is a story of acquisition entrepreneurship. It was a remarkable outcome with lots of themes that this audience will recognize. Let's begin, Kevin, going back even further. Tell me a bit about how you grew up, please.
Sure. Will, thanks for having me. It's a pleasure to be on. I'll take you back to the beginning, I guess. I grew up in a small town in Ohio that had one stoplight, very modest. My mom was a factory worker. She was a welder, and she raised me by herself. I was the only child, so it was just her and I. She taught me really good values. We just financially, we weren't well off. And in fact, if you wanted something in my house, you had to go work for it, whether it was football cleats or whatever it was, you had to go work. So at a young age, I just started, I guess you want to call it hustling, but I was kind of forced into entrepreneurship when I was a kid to make money at a very young age. And I started mowing yards and grew that and did other things that, shoveling snow in Ohio and the snowstorms, and created really a nice little income for myself to be able to afford the things that I wanted, whether it was a car eventually as I got older and other things. And in fact, I tell this story a lot. I often tell my mom, she had these big dreams for me to go to college and get a normal job and escape the situation we were in. And I tell my mom today, if she wouldn't have made me go to college, I'd have the largest landscaping business in the country right now, and they're selling for pretty high multiples. So we joke about that a little bit.
But you did all right after all.
Yeah. I always had that in me of as a little boy driving by businesses and looking at them and thinking, what does that person do? How did they build this? And questioning that. I was always super fascinated about the freedom and the possibilities and the upside financially. Yeah. I was really driven by getting out of the situation that I was raised in financially. So, but in the back of my head, I had this thing of following the path that my mom wanted me to go get an education. And so I was the first kid in our family to go to college, and it was a remarkable opportunity for me I tell kids this a lot when I talk to them, that college is less about the classes you take and more about the hands you shake. I was able to meet some just incredible people and their parents that were doing things that I wanted to do. And I've always been very curious, and I ask a lot of questions, and I would sit down with their parents when they would come watch us play a football game and say, hey, I want to do what you're doing. Can you help me? What would you do if you were me? And listening to their guidance and support. And college was a transitional time for me. I always got good grades. I worked really hard. I was never the smartest kid in the room, but to me, grades were more of a competition. Like, I'm not gonna fail. I want to be at the top and compete with these other kids. And so I as I went through college, it helped me kind of get more comfortable around people that had financial success. And I never really was. I was never exposed to that. I mean, we had people flying in on, jets to watch a small football game, and, we're thinking about how can we get gas money to go there for my mom to see us. So, and she was at every game. So I had a great support network. So I get out of college and immediately land a job in financial services. And I actually built up a nice book of business that another advisor, within 18 months, I had sold that practice to another advisor in our office. And at the time it was, a big check for me. I was like, I can't believe I just did this. And this was in the mid 90s, right before the Olympics were coming to Atlanta. And I thought I was, untouchable. I had a giant ego, and I can build anything and make this work. And so I went down to Atlanta and to buy some real estate to transform it into kind of properties for Olympics, for the Olympics that were upcoming. Mm-hmm. that is a whole other story. That is probably a whole other podcast. But a long story short, I ended up losing everything that I had made, and I had a 2-year non-compete to go back into that industry. So I couldn't go back into something that I really knew and was successful at.
Can I stop you here with a couple of follow-ups?
Sure.
First of all, how much money are we talking? Understanding that you were in your early 20s, so it wasn't huge, but it was big for you at the time. How much was it?
I don't recall. It was an adult number for me at the time. It was financed over a 2-year time frame, so it was like an earn out. So as long as those clients stayed, I got a piece of their production, and so it was an income stream for me, really, to go out and do what I really wanted to do. But I failed miserably, and it was probably the most humble and humiliating time of my life. I'm young, probably 25, I believe I was at the time. And I actually had to move back home, and it was embarrassing because and it almost validated of like, you should have went out and got a real job and made yourself successful.
Well, what happens next is really fascinating. Before we get to it, I'm curious how you reflect back on college. Having gone to college. You said, I love the expression, it's not the classes you take, it's the hands you shake. But do you think that if you had, honestly, seriously now, the landscaping business or some other hustle, if you had just hustled instead of gone to college, do you think you should have? Or do you think going to college, your mom was right to basically force you to go to college?
I think there's truth in both sides of those. I've learned some great things and met great people that I would not have that have got me to where I am today. So I can't say that if I didn't go there. Definitely, though, the learning experience, I think I use 5% of what I learned there. It was more about the relationships and who I met and the contacts and the ability to show people and the self-belief it had in me coming from where I came, that I can compete with these people, like I am capable, that I needed that. And, playing sports, and I'd never really taken on leadership roles when I was growing up. I just kind of kept my head down and worked. And I was a captain of the football team, president of the fraternity. I really took on leadership roles that helped me listen better to people and lead. And I'd never done that before. So it was a great experience from that perspective. But from an education standpoint, I question, what did I get out of that other than a piece of paper that is kind of a rite to passage to go get a big job. So I hope that answered your question.
It does. Oh, that was great. I probably would say my own college experience had similar value for similar reasons. The other thing I'll call out, and I know from our conversation yesterday, that I just heard you say it, but yesterday you said one of the most impactful questions or unlocks throughout your career has been to ask people, what would you do if you were me? And apparently you were asking the parents of your friends that, from the bleachers or whatever at football games. Yeah. So I just wanted to call out, highlight it here, because you said yesterday that has really just been an incredible go-to question over the course of years and years.
And it's still my favorite question today. After this call, I have a call where I'm going to ask it to somebody. Here's what I want to do. Here's what we're trying to accomplish. You've done it, or you're close to that. What if you were me? What would you do? How would you go about it? And I mean, we do it all the time with in our businesses of asking. The best way to ask for referrals, not to say, can you give me more business? It's I want to build my business around other successful, whatever they are, like you. If you were me, how would you go about doing that? And that has led to enormous success for us. That one simple question. The other two questions that I think have changed my life as we're on this point is just asking people, what are the chances of us doing something together? Like a simple question like that. What's the chance that you and I can go out and do something together? You know what we do. You know how we do it. You've seen our results. What's the chances that we have to work together? And then just being quiet and listening to their response. And I've had a lot of success with that question. And then obviously, internally, my favorite question while I'm sitting here, I never want to be the smartest guy in the room. So it's always like, who else do I need here to get us to where we want to go. Me thinking internally, and every business problem that we have, who else can help us here? What do we, and because it's, the answer is usually a person. It's a person that knows something we don't, that has really catapulted us to success. So I think those three questions have, transformed my whole life, if I was to be honest.
And that last one about it's kind of identifying what the missing piece is and what that person looks like, or the talent they have, or the title they have, or where you can find them.
Yeah, this is a little hokey, and I don't share this with a lot of people. I don't want to say it's embarrassing, but I do read this every day. It's like, I trust the universe to bring the right people in the right situations to me every day. And if you trust that, doors start opening for you, right? If you're looking for that, you'll start seeing it.
Mm-hmm. Great, Kevin. Thank you for the digression. Back to the story. You returned from Atlanta, which was a bust, as a young real estate speculator. So you've had one success and now kind of one bust, tail between your legs. You go home, pick us up.
Sure. So I literally have $0. I went from earning a great income to having nothing. And my mom at the time, who I adore and has been a great influence on me, is she had $1,250 in her bank account. And I asked her to, I get emotional sometimes when I share this story, so I don't talk about it often, but she gave me $750 to run an ad in the Wall Street Journal. And this was pre WSJ.com. This was like the real version of the Wall Street Journal. And it ran nationwide, and it said young, aggressive entrepreneur seeking equity in small growth company. And it had my mom's phone number to our little abode that we lived in, that I grew up in. And 72 people, I think it was, over 70 people called on that ad. And I guess that was like a searcher before the term searcher was even available. Now, in full disclosure, probably over half of those people were, multi-level they wanted me to join their downline or something. They were like, wow, this is interesting. But, and actually one guy called from, he was out in Nebraska and owned a construction oriented business. And we had talked several times, and he was interested and liked me. And then when he found out how old I was like 25. He was like, my guys are going to chew you up and spit you out. There's no way we could do this. And so it was a little frustrating. And then the very last call I received was from a CPA, and the CPA had acquired one of his clients' businesses out of a bankruptcy auction. And it was a concrete batch plant with 8 brand new trucks, and had said, look, I can sell these for more than I bought them for, but there's a business here. And I was still under kind of a non-compete. I couldn't go back into financial services. So I felt a little stuck. And I don't know if I would have done that if I had other options, but he said, well, I'll pay you a small amount every week. And here's what I have into this business. Let's build it back up. And whatever I sell it for over and above what I have into it, I'll give you a percentage of that. And so I did that, and I moved there, lived in the plant for a few months because I had no money to put down for a deposit. And
where was this plant?
This was it was in Northwest Ohio. So,
and you and your mom were based where?
Like Akron, Ohio area, Northeast Ohio. It was an interesting conversation. He said, look, first off, I've been reading the Wall Street Journal my entire career. I've never seen an ad like this. It's very interesting. And I noticed the area code was Ohio base, and I had to call. And so I drove over there and met him and sat down for breakfast. And he started talking about this, and he took me to it, and we looked at it. And so we came in there and we turned that thing around, and they ultimately sold it within a year. And that helped. Like, I got some capital to be like, okay, now I'm here. And by then my non-compete was starting to end, and I had done work with some investment work with Invesco as in my financial practice, and so they were calling me and saying, look, here's an opportunity we have to go raise capital for our funds. You did a good job when you were on the other side of the fence. Come over here and work with us. And it was an opportunity at the time. I'm like, maybe my mom was right. Maybe I should go after this and go, try to build a career here. And so I did that. I went and I worked there. I traveled around and raised capital for the funds that they were raising. And I was really good at that. I rose up the corporate ladder pretty quickly. And I remember this was 20 some years ago, Will, but I was in a hotel room and I looked in the mirror, and 10 years had went by, and I was a partner, and I was making more money than I ever thought I would as a little boy, growing up. But I was the most unhappy that I had ever been in my whole life. Even during the Atlanta, I was just miserable.
Just not liking your work.
Yeah, look, I was happier mowing yards in Ohio when I was a kid, like building my own team. And I wanted that feeling back. And so I think a little bit to my mother's dismay at the time, I called her up that day and I was getting ready to get on a plane. And I'm like, I think when I'm landing, I'm going to give my 2 weeks notice in. And I was a pretty young partner there. Most of them were older folks. So everyone was a little surprised and shocked.
Just going back to the ad in the Wall Street Journal, that was sort of a job ad. Yeah, I mean, it was a complete, a creative thing. You took out a full page ad, but your hope was that somebody in an organization would call you to offer you a job. You weren't necessarily looking to, that was the end goal?
No, I mean, my thought was there has to be quite a bit of individuals out there that are setting on something that have no really transition plan, and maybe I could be that for them. I saw that in financial services. There was a lot of older folks that had built a good book and were like, what do I do with this? Who do I sell this to? At the time, this was mid-90s. And I'm like, there has to be so many businesses out there where there's a 68, 70-year-old owner whose kids are now dentists and they don't want to move back to Springfield, Missouri and run the ball bearing company. It's just not sexy. And I really wanted to do that. And I thought that would catch the eye of someone like that.
So it really was a searcher. You were a searcher.
Yeah.
But
they called it crazy back then, but yeah, it was a searcher.
So I guess it didn't work out exactly that way. You didn't get business owners. You got the CPA in the concrete business, which worked out great. Where did you come up with that idea?
I don't recall. I knew I had a great mentor who said, when I called him and I said, look, I've got a promotion within this company that I work for and I'm really proud of it and I've worked hard for it. And he goes, congratulations, you're going to be very rich. And I said, thank you. And he goes, but you'll never be wealthy. And I said, well, what's the difference? And he goes, when you're rich, you know what you make every year. He goes, when you're wealthy, you have a lot of free. You don't know exactly what you made. You know it was a lot, and you have this freedom. And that just stuck in my head all the time. And so when I think about that ad, I always think about like the equity part of this. And I don't know what made me say that. I just know that I wanted ownership. I wanted to own something if I was going to go help build something.
Yeah. And give us just a little bit of more on the concrete story, Kevin, because I know it from our pre-call. And it's a story of being very scrappy and clawing your way back. So give us a minute or two on what it looked like as you turned that concrete business around. And the numbers, can you share those numbers?
Yeah, it was a long time ago. It wasn't what we're doing now, but it was, it saved me. It was, he had, I think it was $1.5 million into the business. He paid me $500 a week to run it and to grow it. And we went out and said, who's our ideal customer? What's our ideal customer look like? We really got focused on that. The employees would come in and they were like, you here all the time. And little did they know I was like sleeping there. And I had a gym membership. I'd go in the morning, take a shower and come back. And it was scrappy and we built that thing up. And then a large competitor ended up buying us, and the percentage that I got, could have helped me live for the next 2 years, but I really took that and put it into savings and said, I'm going to reinvest this into something else. And then when I got a job at Invesco, I moved to this neighborhood and I joined a gym there to work out in the morning. And there was this young kid, he was 20 years old. He was selling gym memberships. And sometimes I'd go in the morning, depending on when my flight was, when I had to leave. And sometimes I'd go late at night. And he was always in there all the time, just hustling. And I went up to him and introduced myself. I'm like, do you own this place? Like, you're always here. He's like, no, I want to own something someday. And he was young, 19 or 20 years old. And we became really good friends. I was pretty young at the time too, 25 or so. And when we would sit and talk a lot, and he's like, I think I want to do something different. Like he pretty much asked me, you know, if you were me, what would you do? And I was like, well, I would like to invest. I tried real estate. I think there's an opportunity there. I would get into you're a good salesperson. I'd get into real estate. Like, you can kind of control your own destiny there. And there's a lot of upside instead of making a salary and a commission. So we did that, and he became one of the best real estate agents in the Midwest. Like, the guy was just an animal, and he had sold my house, and we were still good friends. And out of the blue, he calls me and he said, Kevin, well, we would talk, you know, once a week. And he called me and he said, hey, have you ever heard of radon gas? And I was like, kind of. When I wasn't paying attention in chemistry class, I think I recall hearing that name. He's like, no, it's prevalent in a lot of homes, and it holds up a lot of real estate transactions, a lot of mine that I do. We have to get it tested, and then if it's high, we have to get it fixed. He goes, the problem is there's one guy in our area that does it, and he's booked like 4 weeks out. And he goes, I know every realtor in our state, like that's of consequence. And I think if I started something like this, they would use us. And so I got really interested in that. And so I flew out, we met, and we went to dinner. And the next morning we woke up really early and we're having coffee. And I said, oh, what's that guy's name that you know that is booked out? And he gave me his name. I go, do you have his numbers? Like, yeah, I call him all the time. And he usually takes my call because I give him a lot of business. He puts me to the front of the line. So I'm like, let's meet him today. And so he gave that gentleman a call. He was a kind of soul. Like, he was just a great guy. And we went and we met him at a big boy restaurant right off the highway. We sat down at a big boy restaurant. Back then he had one of those little flip phones that flipped open. Sure. And it was sitting on the counter. We're drinking coffee. And he was explaining to us how he had retired from Ford. He was an engineer. He needed to do something as a hobby, and he started doing this. And now he felt like he was letting everyone down. And the whole time he's telling us the story, his phone's just like vibrating and twisting around on the table. And that's when I'm like, wow, you're
actually hearing a cash register ring as that phone rings.
Yeah. And his reaction was like, oh, it would always like, oh, you could tell he felt like he was letting people down. And he had a handful of employees that worked for him. And he goes, look, I'm retired. My wife now, she lives in Florida, and I want to get down there. We have a condo down there. All I want to do is like go down there and retire. And so I said, well, how much would it take for you to do that? And he's like, I don't know, like $60,000. And he financed half of it. So, and I had left, and my partner, whose name was Jamie, who just was in my wedding, was my best friend, and we were really close.
The real estate agent.
Yeah. And I knew his work ethic. He is really a marketing savant. He was phenomenal. He was just obsessed with getting the phone to ring even more than it was on that table spinning around. Mm-hmm. And he was willing to give up his role in real estate to go make this thing happen. And so we sat there and listened to him. We ended up buying that company, that little, I would call it a company. It was a hobby for the guy at the time. It was a little business. And then shortly thereafter, I would talk with Jamie every day, and we would think about obstacles to running it. How can we build out the fleet, and where do we expand next, and talking through all the growth challenges. And finally one day he called me and he said, Kev, I need help. He goes, this thing is it's either going to continue to double every 6 months or it's going to go to zero. I need help. I can
Growing
get the
too
phone.
fast.
It was growing way too fast, and we were having some challenges with people.
But and Kevin, before we get into how it grows, let's just spend a minute on the transaction. And I know that in the grand scheme of things, the transaction numbers were insignificant because this became such a big success. But you said $60,000, and it felt like the seller just kind of pulled that out of the sky. So assuming here it wasn't based on earnings, multiples, anything like that. It was kind of everybody just kind of doing one of these. Sounds about right.
It's exactly right. And that thing was due in large part to my partner, because he knew his work ethic. He knew that how he treated people. He knew that he could trust him handing that over to him, and that his clients were going to get taken care of. And that's really ultimately what he wanted. I think a lot of searchers today try to back in. If you start the conversation of what does the next chapter look like, what do you, in an ideal situation, what do you want it to look for you? Because if it was all financials, I would have offered him a lot more money than that and been willing to pay for it, because it was a great business. But he just wanted to hand it over to someone that he could trust and get on with his life, and we helped him accomplish that. So it was a good lesson.
And Kevin, one of the things that searchers avoid are businesses like this that are so small, so fragile, so much key man risk. Sounds like this gentleman had a few employees, but really it's all about this guy. He's getting these direct calls. His flip phone is the one that's blowing up. He's the personality that people want to deal with. So, and I know you'd agree. Yes, those were all serious fragilities in the business. You figured it out. But I guess if this becomes such a big success, a multi-million dollar success, spoiler for the audience, is there a lesson there in finding some uncut gem for the lesson for the audience, and finding some similar uncut gem today that has incredible potential? Because this pattern still exists, where a guy's got a small trades business and he's barely holding on. His phone is blowing up constantly. He can't call. I mean, in fact, you hear a lot about small businesses, small kind of home services businesses, that they don't return your calls because they're so busy. So was there some special ingredient here that made it so powerful? Or in fact, could this model be repeated today in 2025 with a like business that some searcher stumbles upon?
It's a good question. I think about this often, and keep in mind at this point in my career, I really didn't know what I didn't know. If I knew what I knew today, I probably wouldn't buy that business. It would be too small. And
you're right.
And it wasn't an overnight success. We took 3 steps forward and sometimes 5 steps back, and it didn't happen in 3 years. It was a decade-long journey of years where it wasn't working well. So it all sounds great to look at. I mean, I had hair when we did that transaction. It's always harder than you think, and I don't know if I would do that again. I mean, I'm speaking out of both sides of my mouth, because I want to buy larger businesses now, because looking back, it's a lot easier to own a smaller piece of a much bigger pie than to sit somewhere and go through the pain that we went. Now, it was fun. We had a great time, and it was interesting to see, but there were some scary times in that business as it grew too fast. And so I don't know the answer to that. I do believe there are, the stars are aligned for us. Like, it was a highly fragmented industry. It was this niche environmental space that was gaining in popularity. People were starting to figure out. There were actually right when we were buying it, there were, laws changing where, realtors had to test for radon in a real estate transaction. So I think there
were some tailwinds there. It really was a moment in time.
Yeah, it was. There just weren't. There was no large national players at the time doing it, and so we thought we were onto something. We found something that was incredibly niche that lots of people didn't know about. that was the second leading cause of lung cancer, right? Behind smoking cigarettes. So it was, and there were other things that had happened. People were, they were threatening. There was some legal issues for realtors not declaring that there was high radon levels in a real estate transaction. So the industry was starting to change and say, we've got to start doing this. Mm-hmm. And this guy had built a great reputation, and every realtor wanted to use him. So it was a good point in time for us.
Yeah. Okay. And so you and Jamie, so you decide to offer him the $60,000. He says $60,000. You say, okay, right there in that first meeting in the big boy.
Yeah. We bought it. And he financed half of it for us, and we paid him off. I think it was 6 to 8 months we had him paid off, but we were just like, let's just pay him off and, be done with it. And so we had to keep a couple of his employees on. That was one of his arrangements. Like, I just want these, some of these guys to stay on for at least a year. And after that was over, we brought in our own people, but it was, and I had actually, my partner was running it at first, and we'd talk at the end of the night and the beginning of the morning on what's your day look like, what do you need from me, what can I do to help? And then he calls me, and this was right in my transition of like, what am I doing? Like, I want to go do something. And we were figuring out the marketing side of this on the home. This is 1990, this was probably 2000s, early 2000s, right? Mm-hmm. And so, we were figuring out the marketing side of this, and he found this piece of software that we wanted to buy and bring in-house to help us. And so we did that. He goes, I want to focus on that. I need you to help with how do we think about running this business. And so that's when I moved back there and took over, like really became the CEO while he focused on building out the sales and marketing and other things. We kind of shared dual roles, and things overlapped, and it was moving. And
was this the moment in the mirror? You're in the hotel room, mm-hmm. and you look at yourself in the mirror, realize your miserable state.
Like, what am I doing? Like, I want to go build this. Like, let's go build something really cool. And so I, you leave that to go. We didn't make any money for the first few years. It was like every dollar we made, we'd buy new trucks. We had no debt. We would just run the business we'd get money and we'd go into a new market. Let's go. Let's buy everything we need to go, start buying the ads, get the people hired. And as fast as cash came in, we just kept growing the thing. It just kept growing really quickly.
Yeah. And this was, where was the first territory?
Mid-Michigan was where we bought it, in the middle of Lansing area.
And then you just spread from there.
Yeah. Grand Rapids, Detroit, Kalamazoo, Cadillac, and then to Toledo, down to Indianapolis, and just kept spreading.
And do you feel that the way you grew the business, like standing up a new territory, mm-hmm. Would be similar today? Marketing would be different. It would be all digital today. But do you feel like the motion of basically, as you said, you P&L'd a van, so you weren't even using financing. You just, when you had the cash, you'd buy a new van in cash, mm-hmm. and find a guy to run that van, and voila, you're in a new territory. You're in a new market, correct?
Yeah.
And do you feel like that formula would work today? If it's in a market with demand, if it's in a service with demand? I mean, what's different today? And again, think about this from the perspective of searchers who might be looking at home services businesses and contemplating how they can grow something much bigger than it currently is.
Yeah, I think I was much less sophisticated than I am today, and didn't know what I didn't know. And it seemed like, taking on a bunch of debt didn't make sense since the business was producing a lot of cash. and there were moments when we grew into some states when we shouldn't have, and we hired the wrong people, and those were learning lessons. So some of those issues, we both of us, if he was sitting here with me, he'd say the same thing. We learned from, but we wouldn't probably replicate. But those lessons, those mistakes or embarrassments that you have are the best learning things
Sure.
that you can. The next 5 states we went into, we did it better, and we were smarter and more intelligent about how we did that. There were some close calls there that I would want to avoid, but that's part of the process. You've got to. It's the success in this business is not linear. You know, you're gonna have some pretty big setbacks, and it's just how long can you. The person that can hold on the longest wins.
Getting into the mechanics a little bit, would using debt in some way have been a way to grow more comfortably? Because you were also just frantic. I mean, so you're losing your hair, right? During these years, it's growing. So the business fundamentals seem good, but you're also frantic and breathless all the time. So was there being more sophisticated now? Was there a way to have used debt to do this more comfortably?
I think there would have been. My concern at the time, we were all about grow. Like let's just continue to grow our footprint while we can before someone else kind of figures this space out. Let's go capture this. We're going to own this marketplace. Yeah. And a large piece of debt would have just made us want to go even faster at that point. So to some degree, the way we did it managed our lessons that we were learning along the way. But knowing what I know now, it would have if we knew the full scope on how we should grow, but we just didn't. We were, I don't want to say we were figuring it out as we went. We would take calculated risk in a market, and then it wouldn't work, and we'd say, why? Come back to the drawing board and have to revisit it. But it was always operational problems. The farther away that we got from our base, as we went into Colorado and Pennsylvania and Virginia and Baltimore, the more we lost control over the customer experience. And that's the problem that we had a very difficult time solving. And until we decided to take a twist on the franchising model.
Let's hear about that twist.
Yeah, we pivoted. We had these pockets, we had these markets all across the country that were far away from our base. Our core markets, call it 5, 6, 7 states in the Midwest that we could manage pretty well. But as we got into, Boston and Philly and other markets, it was challenging. We had a great business there, but we were having turnover and we were having customer issues sometimes more than we were in our corporate markets. And so instead of going out and selling a raw franchise, we franchised the business. We took these larger markets, Atlanta, all these other markets that were farther from us. And we had multi-million-dollar business operations in those core markets. And instead of finding someone that wanted to spend a small franchise fee for a startup, we found business people. We found people that were leading teams in corporate, like I was when I left. I really believed in this model of let's go find people that are good leaders, that have led people before. They don't need to know anything about Radon. I want them to know how to lead people and manage a team. And we had built out a software package that was turnkey for a custom software package that was really turnkey to help people come in and measure the KPIs and to see the business from on a dashboard level from a different perspective than they may have. And so we went out and instead of finding startup areas, we sold our existing territories. So we'd say, look, this thing's cash flowing $1.5 million. Here's what it's worth. We'd put a multiple on it. We'd find someone to buy it. We'd finance a piece of it. And then we'd get royalties off of that as well and sell them the equipment and support their business. And we own the marketing in that. So we would send them the leads. We'd know how to close them. And so we really taught them how to be successful. And then each and every one of them grew those territories because they were able to sit there at 7:30 in the morning before all their guys went out in a van and, and coach them up and tell them what they had to do that day and really have their finger on the pulse of that particular business. And they were insightful and helpful. And for us too, of saying, but you guys got to change X, Y, and Z, and having us go back to the drawing board. And so we really monetized all those areas that we built up. And then we stepped back and said, okay, what else can we do in the markets that we're in, and what other markets should we be franchising? And that's what led, and that was the pivot point where I'm like, okay, I want to go do this more in other industries. Like and that's when Jamie and I sat down and we talked about what do our roles look like. It was much more manageable now that we had this thing in place, and we basically decided that I would roll some equity. We would work together to find the solution to buy me out. And so I rolled equity over. We did very well on selling those territories and supporting them. We had a business that was paying a royalty along with our corporate markets that was doing well. And then I rolled equity I kept some equity and then took some cash and went and started. That's when really SIRE Capital was created from that exchange.
Well, and I want to spend some time on that, Kevin. But before we get to that, can you explain this decision to, so business is growing, you're expanding further and further away from your core corporate markets, your home base, and in those far-flung territories, quality's going down, you're having quality control issues. You decide to make the business a franchisor, but instead of selling new territories, de novo territories, you basically sell as existing territories to local business people in those markets. So this is a case, oftentimes searchers will see franchise resales on the franchise resales on the market. And sometimes those will be actually being sold by corporate. So corporate will have corporate owned locations that they, for whatever reason, want to sell. That's what you guys were doing sort of at scale or all at once to solve the quality control issue. Question is, why did that solve the quality control issue? Because these entrepreneurs are just now going to care more than your kind of local employees did. Why did that solve the quality control?
Yeah, they were vested. They put a big chunk of their life savings. This is a business for them. They left their jobs to buy these things, and they're running them full time. And the first one we sold, I knew was going to be the most important. So it was someone that I had known very well. And I said, I need you to it was our Denver location. I need you to set up shop here. And he kind of set the tone and would help interview other people and teach them what to do. He became one of our most successful franchisors and really our spokesperson and they leaned into him for more training. And it was just a model that I knew that would work. Could we have hired, in hindsight, could we have went through the process and hired GMs to go run these things? Probably. But we decided to go this route to bring a little more professional knowledge into the business that we probably lacked in each of those territories.
And what other decisions or impacts does going from all corporate owned to a franchise model have? My understanding of why a business would become a franchisor in general is to supercharge growth, because now it's a more scalable model. You sell franchisees, you develop all these SOPs, and you can really kick up how quickly you put dots on the map. That was not your motivation number one here, but maybe was that your experience that it unlocked growth a little bit as well?
Absolutely. I mean, these territories started growing faster than our corporate-owned territory. So these people are in there every day working their local markets, going to the realtors' offices and the property management companies face-to-face, shaking hands, kissing babies, asking for the business. And we didn't have anyone there doing that. So they were running the business. They were running their business in their territory every day, paying attention to it, and it started showing. So it did spark growth, and it gave us an opportunity. We had to change our mindset a little bit into a support network. We always handled all the all the marketing, and we had a giant call center where people from our marketing people would call into our corporate headquarters, and then we would pass the leads on to the local markets. And so we had a really good system that we could scale, that we knew we could really scale. I think the problem, there wasn't a problem. It was just my partner and I were so close, and it was the first time really we had a different vision for the business of what we wanted it to do, and not in it was very cordial. It wasn't like, we had markets like Iowa. There were a lot of Nebraska. There were other markets where we didn't have, there was demand. We just didn't have business operations, and probably about 11 or 12 other states. And he wanted to go in there corporate owned de novo. And that was always, we could make it work, and we learned a lot through the process, but it was like, we've got this unbelievable success. Let's just sell de novo franchises there and sell them get the royalties, teach them the system, and let them run it. That was working really well. But obviously you can make a lot more money if you do it yourself. And he saw that. I just saw it was a time for me to be like, I want to go do this in another industry, or go look at other things. And so we just agreed on a multiple or enterprise value for that business. And this is after we kind of sold a lot of our territories already and split those profits. And then I took that, and then he was right. Like, he went and grew it even more. And so he went out, and they bought a bunch more vans, and they went out and continued to do it. And I was his biggest cheerleader from the sidelines, but I got a chance to go kind of diversify and do other things as well.
Can you share what these two liquidity events look like? What the valuation was when you decided to step away?
Yeah, it was in the, it was above 25 million. I mean, it was because we had sold all these other markets around, and then the value of that business, and he owned half and I owned half. We never had like major disagreements where we were going to battle with each other. We'd always seemed, it was a great relationship, business wise and personal, where we'd come to terms. And then,
so 25 million or so, when you first exit and you own half of that, you rolled 10%.
mm-hmm.
So let's say you walked away with, call it 10 million-ish, a little more.
I think that's fair. It's a little more probably after we sold those other markets, but that's probably fair.
Mm-hmm. Mm-hmm.
And
then you kept 10% in, and then he kept building it, and
mm-hmm.
then sold it outright, right?
Mm-hmm.
A few years later for?
It was above 70. It was just under 80.
So your 10% then became another.
Yeah, it became another
great second bite.
Nice, meaningful second bite. Yeah.
Yeah.
And so it was a great experience for me. It wasn't, we did other things together. We bought real estate together and did some other investments together. And I just wanted to go see if I could I scale this? Could I find people that were like me to invest in and spread that money out and help them continue to grow? And that was my really passion at that time, was to go out and try to put all this money to work and see if I can grow these and help coach them and grow those businesses.
And say more about that, because in our pre-call, this theme has come up with you in my handful of conversations
mm-hmm.
with you about investing in people. Another way of thinking about this is investing in private markets versus public markets. You dabbled in public stocks and
mm-hmm.
had held Enron. That didn't work out well.
Yeah.
So there is something in you that's really drawn to the lower middle market,
mm-hmm.
private businesses,
mm-hmm.
and the people that populate them. So please say more about that.
Yeah, I think it is more about having the opportunity to control outcomes. If I go buy Tesla or I go buy a public, I'm not having any influence on the outcome of the performance of that company. This, I believe, we have very hands-on. We have a tremendous say, if not the final, we have the final say in the direction and strategies that these businesses take to create amazing outcomes. And to me, look, especially when you go through a situation like you have a piece of your net worth in a publicly traded company that is no longer with us, and that disappears, and you're like, I had nothing to do with this other than picking a horrible, stock to invest in. I was like, if I'm going to go down, it's going to be on my decision. Something happens to me. And so I really wanted to bet on myself. So to this day, a little small piece of my, net worth is in public markets, and I would rather own private companies that I can control.
Anything more to say about buying big versus buying small? Have we kind of exhausted that, or is there more?
No, I think our profile today is, we're looking for at least 3 million of EBITDA before we buy something. I think we can still impact the growth. There's always this balance in people's mind. I think I might have talked to you about this before. I say this a lot. I look at people, and every person has this balance between security and opportunity. And I think today those businesses, there's 30-year-old businesses where the owner started with a ladder in his truck 30 years ago and never thought he'd be making $3, $4, $5 million in profit, and doesn't really want to risk going out and scaling that into other states, into other markets, or to other verticals. And that's exactly what we look for. We look for those types of management teams that want to take something that a founder did incredibly well and scale it. And there's all kinds of opportunities and challenges that come with that. And our job is to coach them up and to show them the way, and to be there as a support, and sometimes a therapist, to talk them through those challenges.
And Kevin, at the top, I characterized SIRE Capital as an independent sponsor group. So give us a few more sentences on what SIRE Capital is.
Yeah.
Say more than just independent.
I would say
sponsor,
we're kind of like a hybrid family office. We have some LPs that will come into deals with us. We bring deal by deal. We don't have a fund. We look for, we have very simple thesis. We want to own companies that do at least 3 million of EBITDA, that have strong management teams, and that if we look forward 10 years, we get a strong belief that 10 years from now, whatever they're making or servicing, there's going to be a higher need for it in 10 years than there is today. And can we build the smartest people in the room around that space, motivate them with equity and a great paycheck, along with equity and upside, and go out and tackle that market and win. We want to win every day. That's what we talk about constantly.
There's an evolution here. There's actually a lot to your story between, by the way, audience, the name of the Radon business was SWAT Environmental, right?
Yeah.
So there's a lot to your story between the SWAT Environmental exit and how SIRE Capital looks today that we didn't even get into. But suffice it to say, you have a lot of operational experience, and you bought this tiny business. Going back to SWAT now, you bought this tiny business and really built it up. Question is, I know that you interact with a lot of searchers as well. You're plugged into UNC. You're based in Raleigh?
I'm in Charlotte.
You're based in Charlotte. You're plugged into the UNC kind of search ecosystem, or you've spoken there, as I recall?
Duke and others.
Duke, sorry. And so you interact with searchers as well. Is there some path where you think that searchers can go right into being independent sponsors to really think big? We talked yesterday in our call about thinking big. An independent sponsor buying $3 million EBITDA businesses like you do, that's kind of the next level of entrepreneurship through acquisition. Is that something that somebody needs years and years of operational experience like you had to go off and do, or could they come right fresh out of business school and start doing that?
Yeah, I think you can do whatever you think you can handle. Like I had someone that owned a bunch of Subways once tell me, I started with one, and running one Subway is a lot harder than running 150 of them. I don't know if that makes sense. I do think there's just different challenges, and it's such a personal thing. The one thing that I can say is this is, when I talk to searchers, there's this desire to own. When we're buying a company that size and we're putting up the capital, we're controlling those businesses. We give a lot of equity out. We let people earn a lot of equity in them. But there is this element to controlling their destiny. And I think you can do that when you buy a smaller business. There's more risk at the table associated with it. And I would say if I could go back and talk to my younger self, I would say go buy a larger business, go get support, buy a larger business, own a smaller piece of it. It can pay you what you deserve. You won't have to not have an income for 3 years while you build a business, and you'll probably have a lot more hair when you're older, and you'll get a lot more sleep.
That's great. Very clear. We're going to wrap up here, Kevin. I wanted to ask a personal question. Do you have children?
I have 4. Yeah, I do.
Now that you are raising kids and are a family with money, how do you treat their relationship to money? Since so much of your origin story was learning to hustle from a young age. This is a common question for people who've made a little money in their lives, how to teach their kids to appreciate money, to work hard, et cetera, all of that. How have you approached that question?
It's something I talk a lot about with friends of mine now, and what they handle. So it's a good question. I'm glad you asked this. It's super important, I believe. Now, I'll give you my answer, and it's not a popular one. Most people don't like it, but I'll share it. And this all stemmed from, this was a while ago. I have 3 daughters. I have my youngest as a son. I have a 17-year-old daughter. I have twins that are in 14, and then my son's 12. He'll be 13 here shortly. This was a while back when my son was young. I took all my kids to where I grew up, and we parked in front of the house that my mom and I grew up in, and I got teared up. Like I just sat there, and my son was super little, and he's like, "Dad, are you crying?" And I'm like, "A little bit." He goes, "What's wrong?" And I'm like, "That's where Nana and I grew up." And he looked over at me. He's like, "Dad, you would never live in that house." It's like they're so young, they don't get it. But I had, and this is what we do in my house that has helped me. And this came from one of my mentors that I met in college, who had a son. This guy was very wealthy, and he had a son that was a good friend of mine who was just, t-shirt, always he was always like getting coupons and saving money. And I'm like, you guys have like 4 houses around the world, and you're so wealthy, and you're clipping coupons. And his dad told me, he goes, "Look, when you have kids, here's the rule that you need to," and this is how we've raised our kids. When they turn a teenager, I tell them, I'll always be here for half of whatever you want. Like when you're 13, you want a $200 pair of jeans, you got to show me $100 or whatever it is. You want a $20,000 car or a $100,000 car, you got to show me you can make 50 or whatever half of it is. And so all of our kids work a lot, and you have to be willing to have some junky looking cars in your parking lot, but I would rather in your driveway, but I'd rather have that and kids that have really strong work ethics. And so they all understand that they have to go roll their sleeves up and save and make money and make good financial decisions before they're going to get access to anything. That we're always there to pay for half. And if you can't come up with the first half, you're going to have to lower your standards or increase your work ethic or increase your output. So that has helped us. A lot of people don't agree with that, and I get it, but it's helped us, I think.
Because they think it's ungenerous or harsh?
Yeah, they're like,
why don't you just give them?
Yeah, I think it's harsh. A lot of people think it's a little brutal, And my kids do at first too, but then they see it. And the first one that went through it, the others now they get it. And now even the younger ones are like, man, I'm going to have to save this much money. How can I do that? Like they're starting to think about the consequences of what that means to invest in yourself and have to save money to go get things you want.
Yeah. I've never heard this one. But I really like it. I like it a lot. Because I mean, I've heard the extremely harsh version where it's just like
cut them off,
or they just don't get any special access to anything that another kid wouldn't. You know, they get their allowance, and and that's not necessarily more generous than in another family. But this it instills the work ethic and the need to understand, to figure it out on your own. But it still does have the cherry of the benefit of coming from a family that has resources, because you can amplify their efforts by doubling their efforts. So if they can get to X, because of who you are, you're willing to take them to 2X, whatever it is.
Yeah.
It's a really interesting, really cool. Well, thank you for sharing that. I know
it's
very personal.
They're still young.
Okay. But you have seen it.
It worked for someone that I really respect. So I'm following that. The best ideas are the ones you get from other people that it's working for.
What would you do if you were me and now you have money and you have 4 kids? How do you treat?
Exactly. Exactly right. That's exactly right.
Anything else you want to leave us with, Kevin? Thank you for sharing this story. It was such a great run. I've now heard it a couple of times. I love it every time, and you tell it so well. Anything else?
No, Will, this has been great. I appreciate you having me on. It's been a pleasure.
Great. Well, we will provide links to your LinkedIn, to SIRE. And if people want to reach out, and do you show up at Duke from time to time? Is there something people should watch out for?
I think once a year I'll show up and speak there. They have pretty strong ETA classes and stuff like that. The only other thing I would add is, if anyone's listening to this and they do find a larger business that that what I've said resonates, like we look for really good operators that are solid people that have hard work ethic and really want to go grow. We'd love to talk. Great. Yeah.
Perfect note to end on. Kevin Ramsier, thanks for joining us.
Thank you, Will.
Hope you enjoyed that interview. Don't forget to subscribe to the Acquiring Minds newsletter. We send an email for every episode with an introduction to the interview, a link to the video version on YouTube, and soon, key takeaways, numbers, and more essentials from the interview for those of you who don't have time to listen or watch it. Subscribe at acquiringminds.co. You'll also find all our webinars there on the website, both those we have coming up and recordings of past webinars. At this point, there are over 30 webinar recordings, a wealth of information on all the technical nitty-gritty of buying a business. acquiringminds.co.